Nicholas, what are you doing here?
Oh, you know, episode 46 of Hxro Labs. That's what we're doing here. A lot of bloodshed in the markets last night, but, you know, we're here to pick up the pieces and see where the opportunities are.
Must be Halloween.
I know.
Market scared the shit out of me today. Sold all my bags.
Well, hopefully you're ready to pick some up once they start the capitulation here, probably in the next couple of weeks.
You're going to tell me where to buy them back, right?
Oh, yeah. Then we're going to give you the exact targets of where to resell them.
Good, because I don't want to do any work at all.
Well, that's why you're here. You're here to learn, right?
Excellent.
Awesome. But let's jump into it. You know, Bitcoin, probably the king of everything right now, and it's holding up really well. Could this be the start of the great decoupling that, you know, the fabled crypto community has been waiting for all these years? It might be. You know, S&P is down quite significantly, down at the 3230 level right now. And Bitcoin, you know, still holding above 13.5. Normally, with these type of movements in legacy, we would expect Bitcoin to have followed pretty closely and crash down to 12.1, 12.3, and yet here we are, higher lows on the 12-hour, higher highs. So Stokes momentum indicators are resetting right now. So yeah, I think there's a lot of good things going on in this asset right now, and the underlying bid from institutions. I think that's just going to keep creeping up and pushing us up here into 2021. But let's jump to the share screen.
Beautiful. Now, just before you do that, I can't hold that voice for too long because it's so much goddamn effort. What I am going to say, though, is today we have a few segments coming up. So welcome to the stream, guys. And as you saw, Nick's going to dive into Bitcoin here. Just before he does, we've got a special guest who's dialing in from the Hxro offices, and he'll be in here in about half an hour, maybe 20 minutes. Before we do that, we're going to dive into some charts with Nick, and then I got a little segment on stop losses, OCO orders, and a few more technical items on Binance as an example today. So stay tuned for that, and welcome. It's a Halloween special. Now back to business.
Yeah, I think the first chart we need to look at here is the US dollar. It's broken out of a 7-month downtrend channel. We watched it for a while from a perspective. COVID's finally ramping up. Europe seems to be slowing down right now. So yeah, I think emerging markets are on the verge of getting absolutely destroyed once that debt matures in the next quarter. I think the US dollar is going to be pumping. I think the rally has yet to begin. We need to see this close above this 2150 bearish throwback level. Until that happens, yeah, there's a short-term bearish market structure, right? But we got these higher lows. Momentum's looking pretty strong right now. Uncertainty in the markets. Bitcoin does have the inflationary hedge narrative around it, similar to gold, but the majority of the world doesn't really know about Bitcoin still. And the US dollar, especially in the weaker fiat currencies, people will move to strength and liquidity, and that is the greenback for now, at least. Take a quick peek here at the S&P. We're starting off on legacy just because the absolute bloodshed that we saw last night. And we're at a pretty big support level right now. We were saying this was the first stop. Sure enough, here we are. We're seeing some small time frame bounces, but this thing's really not going anywhere right now. Can you take a short right here? No, you cannot. You're basically shorting major support. What we need to see at this point, if you are looking to get into a short side, if you expect downside from here, well, we're going to need to see that initial breakdown. And if we see that fade back up on the retest on weaker momentum, that's going to be your entry. So, what we'd be looking for, maybe a spike down to 3160 or something. If we see the price rebound come up here, and that flips to resistance, that's going to be your short entry, right? And we're probably going to be targeting at least 3130 and all the way down to the 3000 levels. And I think there's going to be a lot of uncertainty going into the election here. I did see some interesting data this morning though, coming out of Texas. Apparently the mail-in ballots and pre-voting have already exceeded the total votes cast in the 2016 election. So could we see a lot higher significant participation rate in this election? I think so. I think there's a lot of polarized camps right now, and the polls are pretty close. But yeah, I think we're going to remain in this risk-off window until the election is settled. Not necessarily just after the election day, but once the results are settled. And then I think there's going to be a lot of capital sitting on the sidelines, and the Bitcoin narrative. And if Bitcoin shows a lot of strength through all of this, it's anti-fragile, right? The more you throw at it, the more it takes and the stronger it gets. and it's really showcasing that right now. But let's jump into the Bitcoin chart. We'll start here on the higher time frames. Everything looks really good, right? And at the end of the day, you need to zoom out. You need to start your analysis on the high time frames to make sure you're trading within the trend, right? So, until we clear this major level here, like 13.8, 14,000, I wouldn't necessarily be looking to take a long here. We're all about range expansion. So you don't need to be trading this 3% range that we're in right now. The real trade here is going to be on a break of that 13.9, 14K level. And there's a lot of thin air. Like, look at this volume profile. There's nothing. There's nothing there. So when this thing does break, this thing could really rocket, 10, 15% to drive up to that 15, 16 K level right up there. And there's no bear divergences on the momentum or anything like this. People are claiming RSI, blah, 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 blah. But at the end of the day, RSIs can remain overbought. They can remain oversold for a very extended period of time on high time frames. It's just a sign of strength in the trend, right? So unless you see like divergences forming in the momentum, this is just a sign of strength to me, right? So I think this stuff looks pretty good for the most part. You're forming an inside bar set up here on the daily. So again, like, it's very simple trading from here on out. 13.8, you're targeting 16K. Break down below this, 13K level, you're going to be looking at this bullish throwback at 12.1. So, I think the trades, even if it breaks on the lows here, the trade is more so to wait for the long setup, considering how strong the underlying bid is on this asset right now. Moving over to Ethereum, it's an altcoin at the end of the day, right? Institutions aren't talking about Ethereum being the next world reserve currency. Momentum indicators are pointing down. Yes, on a fundamental view, there is that ETH 2.0 that will be coming out, at some point over the next couple months. That's inherently bullish. It's going to be removing a lot of the circulating supply and locking that into the staking for a while. And yeah, it's an arranging market right now. We're thinking this can come back down here to tag this 365 level if this 380 level fails to hold. But on the long side, you're not taking any positions unless this price is hitting down there at those supports, off the bullish throwbacks at 360. And on the short side, you're probably you already kind of missed your entry here at the bearish throwback. But the real trade to the upside here, once ETH 2.2 or 2.0 is launched and the markets are recovering and the legacy isn't shitting the bed, I think we'll see liquidity flow back into these things. And again, you don't need to be trading this little crap range here right now. You're just going to get chopped up for the most part, right? So wait for that close and move above 420. And you're going to be targeting that daily resistance block for there, probably at 445, and then obviously back up to that 480 level. And once that breaks, what are we targeting? The weekly resistance block all the way up there at 555, right? So plenty of upside trades to be had here with very minimal risk, right? Why? Because you're going to have multiple confirmations and you're going to have momentum on your side and you're going to be trading within the macro trend. So again, that's something where you're going to want to be leveraging up, long in your longs, and then just letting this swing trade roll. When do we think this is going to happen? Again, probably after the election, so mid-November, early December, barring any type of black swan event, which could totally happen. There's ruin and chaos in Europe, and we'll see what happens into the U.S. election here if it's contested or anything like that.
Yeah, always good to expect the unexpected when it comes to crypto. It always seems to be, on the edge of a pivot. But right now we got a really strong trend on the high time frame. So it's it's hard to call bear on this thing. There's no real need to. I think, either you see breakdowns on the 4 hour and it's tempting to say that was it. But really, you want to see a breakdown on the weekly or the daily. 2017, it was clear as day and it gave you a friendly exit. 2019 up to 14K, it was clear as day and it gave you a friendly exit. There's no reason to rush into trying to get out of this one.
No.
In my humble opinion.
Yeah, I think it's just a matter of just being patient, monitoring the legacy market, and just waiting for the election here. Again, I think all these assets in crypto, especially the majors here, are going to be trending pretty hard for the next year. So just a matter of getting those really strong entry points and riding through it. Yeah.
Now, I've got a little segment. I better get my screen share on here. What we got there? Yeah. So I had somebody actually ask about stop losses and OCO orders. since they're pretty important things to understand, I thought we'd do a quick run through of that, because if somebody's asking, that means somebody else is asking as well. I want to make sure that we've got our banner layered. There we go. All right. All right. So real quick, just going to walk through the tool that I use on TradingView to lay out where I want to place orders and a little bit about why. So if you go to your left panel, again, on TradingView, you have your long position and your short position. And these are really great tools as far as measuring risk. And that's really what setting all these orders is about. We're going to zoom in here. And I think we'll trade, let's do the hourly today. It's got some nice levels on it. So first of all, you get your chart out. Some basic things you want to probably look up and understand. You can definitely learn about them by watching what we're doing. Let me just mute that. Bing. So here we've got a pretty clear level, right? You can see price came into it, rejected, came into it, broke through, chop, 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 retest, and go. So I think it's to say that's a key level. The reason I'm talking about this is because you don't want to just set a stop loss arbitrarily. That's a great way to simply get out of a trade when perhaps your trade is still valid. Now, there's such a big conversation we could have about setups and exactly how you want to approach the market. There's thousands of ways to do it. What I'm going to try to do today is really just simplify this in the simplest terms, so that if you're running around in the market without any sense of stop losses, take profits, orders, this should help you a little bit. It will be a good starting point. So right here, we've got support. We kind of broke through, as you can see, price got back above, reclaimed it, and now has broken up. And there's some nice volume coming in. Nothing explosive, but significant enough to say, okay, I trust this level. I think as a trader, if I want to be long up here, then this would be a point where I change that thesis. Okay, so these pivot lows can be a place where you think about a stop loss. And of course, you hear all kinds of things about traders, saying, oh, we're going to go after their stops. And that does happen all the time. So it's really just not as simple as that. And you guys know me, I like to use RLZ, reload zones. All right, so it worked here. If I draw from here up to this bounce, I can get a nice fill. And the nice thing about buying here is that I can have my stop loss right down here. It's pretty close by. Okay. If you missed that one, you could draw it from that point low all the way up to this swing high. Oh, look at that. Got another pretty sweet entry. Again, now I can hide my stop loss here pretty close to those lows. Okay. And it goes the other way as well. Right here. Drag it down. So I'm getting this range now. And as you can see up here, if you're just playing the range, this is where you would want to have a take profit, and you've got your trade and your trade is closed and you're moving on. Okay, so let's say for an example today, rather than being, looking into the future, I'm just going to go back, say, there's the long setup right here. Okay. So let's say I see this chart. Bitcoin's been on a big rally. It dumped, it bounced. Now, as you guys know, I don't try to catch daggers, right? So I'm not trying to buy blindly on this move down, even though there was somewhat of an RLZ tag as well, as you can see here. So, I mean, there was something to be said about buying in this area, but it's too loose for me. I don't know where to set my risk. I like to be a little tighter. So as this bounced up, I'm looking here for a trade setup. So what I need to do is get out my long setup and I click it onto the chart and I decide where I want to get in. Now I might layer my orders and have a few limit orders layered down, average it. I just like to trade the sweet spot. So I'm going to go with 13,000. It's also a nice friendly round number. I'm going to drag my risk to this swing low because there's a lot of volume there, big wick. If it goes below that, I don't want to be long right now. So that is 1.15% risk. Now I need to make sure that this is going to pay me enough to take that risk. I need at least 3 times the amount I'm risking to be interested in this trade. As you can see here, that would be up to this level. So I'm going to risk $1. I'm going to get $3 potentially. And if I keep doing that and I'm right 50% of the time, I will make money over the term, okay? So what do I do? Well, I want to get in at $13,017. So I need to head over to wherever I trade, which in my case is Binance. And right here on the chart, you can see I've already got a little bit of ink up here. So I don't have the replay feature. That's why I'm using TradingView. So this was where I wanted to have my orders. So say my entries here. I need to go now and set my sell. And this is where the OCO comes in, or cancel other. So that means that I'm going to set a take profit and a stop loss in the same order. Okay. Now it's a little tricky right now because obviously if I put this order into the books, it will affect my trade account. But basically, if we flip back to where I'm doing my trades, let's see right here. I want to sell at 13,467. When price gets there, my trade is complete. So I would enter that here. And my stop loss right over here is down at 12,869. 12,869. And my limit for that stop loss needs to be below that number so that when that stop triggers, my sell order isn't exactly that, because if there's a very strong move down, you don't want it to skip you. So let's say 12,869. I'm going to go 12, let's say 860, whatever. So I'll give it $9 of space, okay? And what I mean by skipping is sometimes if there's a very strong wick, your stop order could trigger, and by triggering it, it creates an order to sell here. But what if price has already moved down very quickly, right? It might skip my order. So yeah, I've created a sell order here, but it's not going to sell there until price goes back up, which sometimes it never does, right? So you really want to be careful with these. Give yourself some cushion. I would even take more than $9, and then you just want to factor that into your risk. So let's even just say 40, whatever. I want to make sure that closes. I want nothing to do with this trade. It's going to go below that. Now I take the amount. In this case, we'd say just 100%. I'm going to close my entire position at either this take profit or that stop loss, and then I push sell. Nothing is going to happen when I push that sell button. Okay, what's going to happen? Like nothing's going to actually get traded. What's going to happen is I'm going to get a sell up around here. Wow, magnet tool. And I'm going to get a stop loss order. In that case, I guess down around here. So those two orders will be created, and when one of them triggers, they will both close. All right, so that's sort of the OCO. It's a really nice tool because you can put it on. And then what I would do personally is come back over here. Oh, this is replay mode. I mean, in this case, obviously you get filled and then the trade is complete. But what I would do then on top of setting those orders is then go and put alerts. Because I want to know on my phone, you know, I get the app. I want to make sure that I know when my stop loss order hits that I get a signal on my app that tells me like, oh, you're out of the trade, or oh, you made money. And then I go and journal it, put it in my tracker, moving on. So real quick, that's just how you would use an OCO order based on this little example. Other than that, the person asked about stop losses. I mean, same kind of thing. You just want to make sure that your stop loss has a valid spot, right? If I bought, you know, Bitcoin here because it looked bullish and it was running up, oh no. And then I just put my stop loss here randomly, like what is that, right? That's not a significant level. There's no real change. And as you can see, price going down there didn't mean much. It just bounced right back up. So you really want to learn how to find invalidation levels. And that's actually something Nick and I talk about all the time. So if that doesn't make tons of sense to you, just stick around and ask questions. I hope that kind of helps. I mean, it's a very brief rundown. I could do a more in-depth record video that would kind of walk through that with maybe a little cleaner examples. But I spoke to you on Tuesday. I told you I'd fire that off on Friday for you. So Diana, wherever you are, hopefully that helps. Hit me up in the chat, and I can help you a little more if you want.
This one's for you.
Again, yeah, and I think lastly, I should finish with, if you're asking, how do I set these orders? You're probably not ready to be firing off pretty large moves, right? You probably want to start with the paper trade feature on TradingView. Okay, that's a really nice feature. You can do it down here at the bottom, wherever it is. I usually lose it when I'm live. Here we go. So you can connect to paper trade. All right, and that'll actually connect to exchanges, and it tracks, and you can do everything I just talked about right here on the, well, not on this asset, but you can do that right here on TradingView. I'll just show you real quick. We've gone through it before on the stream, actually. I can ping you with that, but basically, let's see. Okay, ETH BTC is definitely one of them. Yeah, so you can actually do that all on here. Stop, limit, order, all that stuff. You should really have that figured out and do some paper trading before you go firing off real money if you're asking how to set these. Probably a good idea. So that's it. Just wanted to give that quick rundown. Now we have a special guest in the in the studio. You guys actually got a sneak peek. I think our producer was setting up some shots and we saw him pop onto the screen. But real quick, before we get into that, I will just touch on the dominance chart because it's one that I've been watching closely. Now, this obviously gave us our risk off window. So we haven't been touching altcoins in any kind of significant way since September 22nd. I actually had a little dot long that got stopped out. And that was kind of like a, I just kicked myself. I'm like, well, why am I trading dot again? Because I'm in the risk off window. And, just a reminder of that 0.5% loss, no big deal. But we are trending up somewhat, as you can see here, as I expected, and not really interested in alts until we get here. And even then, I need to see this, like we saw back in May, where it doesn't just get to that level, but it then stops and rolls over and breaks down. If we get that, oh my God, it's going to be such a sweet signal. And it's probably going to tie in with a move down here on ETH BTC. As you can see here, I wouldn't rule out a bounce back up to like a VP VR value high kind of thing, kind of squeeze everyone who just dumped all their alts this week, make them feel like they need to buy back in. And as soon as they're confident in their positions, just crush them again. The market is a cruel mistress. So I wouldn't rule that out. I also just wouldn't rule out a straight wick down, a big capitulation as Bitcoin blows off into 14 and 15K, which to be honest would probably mark a midterm top for me for Bitcoin. But let's just, one level at a time. I think ETH BTC needs to fill in this stilt. I think the, Dixie rallying should be, should be a little bit bearish on some of these assets. However, for now, Bitcoin is saying, nah, I don't really care. So here's the weekly look I have on Bitcoin. I was toying with this squiggly earlier. Like, would this be that bearish? Not really. Short term, perhaps. Now, looking here, if we get through this resistance, which we might do on the first try, we might have to have a week of chill and then do it. Either way, there's a lot of objectives up here. And I think you're going to see a lot of FOMO in the market. Kind of reminds me, of all these moves, it usually ends with a big, crazy blow off top, and then you chill and consolidate for a bit. Not ruling out chilling and consolidating a bit into the end of the year. But again, predictions are pretty useless. What's really valuable is finding setups and how you can trade, make money from it. And as Nick said, right, there's an expansion trade potential right here. So now, a lot of this stuff can be very confusing. Where do I set my stop? Where do I set my take profit? Where do I set my limit order? How the hell do I not get stopped out? It's very easy to lose money when you are trying to rush into these kinds of things. So let's see, for example, and this is a segue, so pay attention. This kind of chop is very difficult to trade, right? If you're trying to like rush in and call the next breakout, right? It's like, oh no, we're gonna dump. Nope, squeezed. Oh, we're gonna break to new highs. Nah, dump it, right? And that's why you get this chop, and it's often following a fairly strong move. So you have a trend. Big dump shocks the market into a range, which is what we saw. Another big move, big dump shocks the market into a range, which is what we're doing now. And so on the higher time frames, we are seeing a trend. But there are ways to simplify this. Okay, now options are very complicated. I've actually taken some options classes, nothing like fully focused on options, but definitely part of the TRI program I told you guys I took. And they talk about options. And even coming out of that with all the Greeks and stuff, I'm a little bit lost. I don't know about you, Nick. I know you don't really trade options from what I've seen.
I'm not an options guy myself, mainly just focusing on futures.
Yeah, but as most of you probably know, we did launch, Hxro launched Ticks and Wicks this week. And I've been having a lot of fun with that. It's been a pretty exciting new product that I've been messing around with myself. As a guy who doesn't trade options, I need to approach it with caution. I need to acknowledge my shortcomings, and I've been going in there. So as you can see here, I banged out something. I put like, a couple $100, sell it a little later that day, close it out for like whatever that is, 30%. So 25%. So like I've been having fun with this, and we actually have the founder and CEO of Hxro here on the call. However, he has a bit of an outfit on. So let's get him in this studio. Perhaps we're going back to our main studio, which means you and I need to get off of the screen share, which someday I'm going to have a macro key for. Ba-dum, ba-dum. No camera, Nick. There he is. So, yeah, let's get him on the call here. We got Gunny dialing in from Hxro. How are you today, Gunny?
I'm great. This is actually the first time I've actually spoken while wearing this mask. Normally, I'm not allowed to talk. It's part of the character. But given that it's Halloween and we've launched Ticks and Wicks, and I think it's time that I talk with a mask on. So. Are you getting a rattle?
Oh yeah, subtle rally. Hey, we got Zanzibar in the chat today. Space DD and Andre. Nice to see you.
Here, let me take it off. Maybe it'll be a little bit better. Hang on a second.
Yeah, it's an interesting little rattle, guys. We're just having a quick audio check to make sure that everything we're going to talk about is well received.
There we go. It's coming from mine?
It's pretty subtle. I wouldn't worry about it at this point.
Okay.
Yeah, it's not too big a deal. Yeah. So welcome to Hxro Labs Live. Good to have you over on the other side of the river today.
Thank you. Yeah, this is amazing to finally be here. And, it's amazing from concept to where we're at right now and the work you guys done. It's been just incredible. So I'm super fucking pumped as to where this is going to go very quickly here. And I think timing's great with what's going on in the market, and what's better than to get the Coat stream of conscious analysis and RT's analysis. It's just I think it's second to none. So
that's right. Well, I appreciate you coming on, and shout out to John, our producer. He is the reason that each time we get on here, guys, you see something a little new added to it, whether it's a disclaimer with some music at the start or a studio. All of this, I didn't do any of this, neither did Nick. So shout out to John. He's on the back end. We can hear him. You guys cannot. But he's been kicking butt in the back end. So, so a big, huge week today for Hxro. And I was actually thinking about it pre-stream today as I was out for a little walk, and I just thought, I still remember the day that this was like just an idea first being talked about, and I thought, oh, that sounds kind of cool. Like, well, let's learn more. And so it's kind of mind blowing now. It's like 4 months later.
Yeah.
And I'm trading this thing. And I made $50 yesterday, messing around, just like getting to know it.
There you go.
Yeah. So I mean, it's non-US. So big shout to anyone who's in the US. So sorry, you can watch today, but you cannot come play.
That is correct.
But what did you want to sort of take us through today to do with the platform? I know it is. It's been live 48 hours.
Been live about 48 hours. I think as of yesterday, I'm just waiting on updated numbers. We were bordering over 500,000 outstanding Ticks Wicks contracts that were currently in open interest, and it's been growing. So I think one thing I wanted to touch on is with the election coming up today, the next couple of days. There's another way to look at the market, and one way to express opinions in the market other than just price using products like Ticks or Wicks is through volatility, and not so much thinking about direction, but more thinking about expansion and just will the market become a lot noisier, and will the moves will the magnitude of the moves become greater? And generally around elections and around uncertainty, that happens. So I guess first I'll put it back to you guys. Where would you think that based on Biden and Trump, if you get we start the election day and you get a state that is expected Biden, like a swing state, it's kind of leaning Biden, suddenly it comes in Trump, how does the S&P react, first of all?
I think it's going to follow what we saw in 2016. And I remember the polls I was trading in the 2016 election. Now, everybody was thinking Hillary literally until probably the last half hour. The market was dumping into this, and I think if the markets, I think we could see something very similar. I think with Biden's tax plan, that's going to negatively affect equities.
John, let's flip to my chart while we talk about this. We got the Trump contract.
See that. We'll in that sec. Yeah, but I think we would see a drastic uptick in the S&P. I think the market is very comfortable with Trump at this point. We know what he's going to do. He's not really. He says volatile things. Some volatile policies, but in terms of tax policies and impacts on the market. That's the only thing he cares about, is keep pumping this thing. So I think the market would be really well received on something like that.
For sure, for sure. So the way that a lot of people say, like, well, how can you use Tix Wix? Is this really just a product that is more for kind of like taking punts? And the reality is no. And what we want to do is really be able to educate the users on ways to use these things, in parallel to other markets and to other trades that you're doing, or within the product itself. So one thing that that I've been looking at personally is in kind of testing it out to see how this would work for for users, is doing things like a Wix strangle. And like, what does that mean? So a strangle
yeah, that's exactly what I want to hear from you, because I'm super excited to try this. And I always preach learn first, try later. And so I've been messing around with it on a lower level cost wise. But I saw something about a strangle today online. I think Messi put it out, and I was hoping, like, let's walk through what that is, because I'm interested.
Sure. So just in regular, in plain vanilla options, a strangle is a way to express a view of volatility, and so is a straddle. Like, a straddle means that you have a strike price. So let's say it's like the December Bitcoin 20,000 strike. You're actually buying the call and the put simultaneously on both sides of the strike, which effectively offsets actual price movement. But what it really does is it isolates out volatility. So what you're hoping happens is that you're kind of saying, I don't really care which direction the market goes. I just want volatility to increase. So it's a play on volatility. Now, there's another way to play that that's called a strangle, where you're actually buying a put, buying a call, but at different strike prices. So you're long both the call and the put, but at different strikes. And it gives it a slightly different payoff to it. So our way of looking at that in a Wix product, and first, I guess let's back up and look at what a Tix contract and what a Wix contract is. A Tix contract.
Yeah, I've got them here on the screen here.
Oh, you got them up? Oh, great. Okay. So a Tix contract is going to express a view that says, will the price close above or below, pending which way you're looking, the strike price on the expiration date, where a Wix contract, all it has to do is touch.
So it can wick up into that price even a month before expiry, and that contract closes.
And that contract settles, and you get paid out whatever odds you purchased.
And what exchange are we tracking here? What is it? Is it a Binance Wick? Is it a BitMEX Wick? Like, what Wicks are we talking about?
No, it's multiple exchanges that compromise that make up the index.
Yeah, I believe it's 6, right?
6, yeah. That is a composite of 6 that make up the index, and so there's not any one market. Like, if liquidity vaporizes on say Binance, it definitely isn't going to get the full effect of that in the index price, and so it's really hard to try to, people are trying to manipulate it or something like that. It's really not going to happen. So,
yeah, and you can actually chart this. I've got it on here. I've got the full index code here. So if anyone was really keen for that, you guys just hit us up in the Telegram.
Great.
And that link is in the description, and I'm happy to share this with you. And then that's like, okay, this is the Hxro index chart.
Yep, that's it. So so what we're doing in this, in a Wix contract, where all it has to do is touch, is effectively you're trading a touch contract that and what you can do is say, look, like right now, Bitcoin is 13,500. This is a good example. And let's say I believe over the course, like by expiration October 31st, so that's 0000 UTC, actually 11 or 23:59 and 59 seconds.
Yeah, that's one thing I had to learn, is that it's not at the daily close. So it's not like 8 p.m. my local time is the daily close. It's actually 11 p.m.
Correct.
So it's an important distinction. But to clarify or to simplify that, I found that you can actually just see how many hours until expiry.
Correct. So what we've been doing is that clock in there, that kind of countdown clock that gives you the expiration window. And so if you took like the like the OC31, which is the daily right now, and you looked at the wicks, so we're basically sitting right between 13,000 and 15,000, right? So at 13.5. You could right now take a position that, and obviously the odds have changed since, I'm looking at the, no, actually, okay. So I could take a position right now and say like, okay, over the next 8 hours, if I thought that Bitcoin would make any type of move where it could touch one of those bands, either the 13,000 or 14,000 strike, I actually would buy both. So suppose you put, $100 on both. So it's a $200 position you're taking. Right now, the 13,000 strike is paying 4.356 to 1. The 14,000 strike is 6.178 to 1. So let's think about what that means. I've now put, I put 2 units in, I put $200 in. By the way, the minimum position size is $1 equivalent on.
I'll do a tenner right now because I like the strangle too if we get some big volatility.
Oh, great. Okay.
So I put $10 in on the yes for 14K tonight.
Perfect. Now, if you go in, all right, so you'll execute that.
So I place that order. So it's going to lose $10 if I'm wrong and I don't cash it out. Correct. Or I get $60.86 if we wick to 14K in any time in the next 9 hours, 8.5 hours.
And this is a daily. We do these in daily, weekly, monthly, and quarterlies. So you have lots of choices and lots of ways to look at it. So right now you've done it to the upside. Now let's say you're saying, look, I don't really have quite a decision on direction, but I do think that because of uncertainty in the market or whatever, there could be some type of move where we then could start moving, up to 14K or down through, or at least touch 13K. So I want to take both sides of it. So now if you go and put a position on the yes, there you go.
Yep. Touch 13, $10.
So if it goes down and touches 13, you're going to get 4.35 to 1. Yeah. So now effectively what you've done is let's look at the payoff and the risk scenarios. You've risked $20, where if it goes up to 14,000, that contract will expire in the money. You'll get paid 6 to 1. So effectively you've earned, so you get 6 to 1 on 10. So you're basically getting 3.05 on your money.
Yeah.
Right. So you're basically getting a 3x return if it touches there. Now, the beauty of this is that just because it touches 14,000, it doesn't mean that your 13,000 is not still live. That contract is still open. So let's say in 4 hours from now that it hit 14,000, you actually have an opportunity for a double hit, where if it wicked up to 14,000, suddenly traded down to 13K for whatever reason, just because the market got really noisy, you actually have the opportunity to also get paid on your 4.35 to 1, 13,000.
Yeah, and I mean that's not unheard of, and it may seem uncommon, and it's nice because you guys can actually do the opposite of this. You say, "Oh, you don't think it's going to happen? Well, take the inside play." Or...
Look at the nose next, which is
but I mean, like this to me, I mean, it's not that crazy. Like especially at this level, we've got this high put in. Okay, so we go to new highs, and there's just a bear smackdown. You see it, and every time you see it, I'm sure there's somebody somewhere historically on an options thing like, yeah, it happened, but this obviously much more user friendly, intuitive.
Yeah, and you kind of think like, a lot of times moves are just like they have to go touch like the level before they complete. Even if like sentiment has actually shifted, like you don't just like turn a what's the saying that they use in the legacy market? Like you can't turn an aircraft carrier at port. So you actually have to like the market will complete its cycle, or it'll just like wick up, and it's amazing how this happens at pretty much every market. You could have news that suddenly turns Bitcoin like super bearish, and like it actually may wick up to 14,000 first before it actually decides to change sentiment and start turning lower. But when it has that rejection usually is pretty nasty. And market makers tend to, because volatility starts going out, they tend to widen their bid-ask spreads. So liquidity somewhat starts to vaporize. And next thing you know, you get that like you're like, how the fuck did we just go from 14,000 to like 11.5
vacuum
in like an hour? Yeah.
Yeah. I mean, you got to figure there is a ton of liquidity resting up here at these highs. And that's going to be, sort of what we talk about all the time. Like the nature of a big uptrend is there's always somebody shorting and like resting their stops at the high. I mean, I did it the other day. I just cut some of my spot exposure. I put my stops here. I said, I'll have a buy stop. I'll be back in. I'm not going to miss this train, but I'm going to take some risk off here because, I've made a nice gain or whatever. So, but to your point, and maybe to try to simplify it for someone watching, if I'm a whale and I have a big position, I have to offload, like Dan said, if there's some bad news, then I need to get out of my position. I can't just sell it here, or at least I don't want to, because it's going to go straight down. If I squeeze the price up, so I actually go out and buy with my, my large pockets, my billions of dollars, whatever, I go and buy to make sure that these all trigger these stops, right? So what do they have to do to close a short position? Well, they have to buy. So they're going to start buying. That's where you get the further spike up. And whose Bitcoin are they buying? Well, they're buying that whale who just pushed the price up. So he's actually selling into all that liquidity, finally getting the hell out of his position that he was trying to get out of because of said bad news. Now he's got his exit. And so that's like a little bit of a description of how that liquidity war works. And if you're trying to figure out the scale of that, I always use an example now, like on Uniswap, you see a coin there that's just got like $1,000 of liquidity. You can't just go and buy your whole position. You can't sell your whole position. You have to play those games. And these are the games that some of these whales, the movers of the market, they have to play those.
Absolutely.
So
back to, if you're long that wick strangle, effectively what you're going to end up with is you're going to have this opportunity to get paid on the upside if it touches. So if you think it's going to trade to or outside of the bands, and let's say it only hit on the upside, so you're effectively have locked in a 3x return on your money. Not bad.
I lose my 13, which was $10, but then I get my the touch above 6x. So I make 300% return. Yeah,
not bad. And so and you actually can cover, because these are live, you actually can cash out at any point prior to that. So if you get a move up and you think like, well, only going to 13.8 or something like that, and then we're going to stop, then when you get to 13.8, you may turn and want to sell, get out of your touch 14,000. You'll probably be, to the on sides and you get out.
Yeah. And I actually did that last night. I had the down here, I was buying the close above 13.5s on the night, and that's 13.5 up here. And it did get back up there, and it wasn't quite expired, and I just closed it. I was in the money. I had a nice return, and sure enough, it actually came down and closed below 13.5. So I was really glad I had that cash out feature.
Nice. And so and then you have your other leg open. You have the 13,000 open, and so effectively your payoff scenarios are the 6.35 to 1 if you rode these all the way to expiration. So fine, you keep going higher. The 13,000, you lose on that, but you effectively win, 3 times your investment. And then you have the second scenario that we do go lower, and we touch 13,000. We don't ever touch 14,000. You get paid the 4.35 to 1, which effectively, because remember you've put $10 on 2 strikes. So now your return's going to get cut in half. You're going to get about 2.17 to 1 on your money. So still an exceptional return for 8 hours of work. And then you have scenario 3 on the upside, where you get this wild swing. You wick up to 14,000, and then we shit the bed, and you go back down to 13,000, and through 13,000, you get paid on both. And at that point, you would recognize your max profit, which would be, almost almost 11 to 1. Not bad risk reward. And, just from like a game theory perspective, if you think that, that the approaching market, or at any, the events of what is coming with the election, will increase volatility in the crypto markets, this is a great way to play it. Now, the other side of the coin is if you think that we're just going to sit here dormant and just kind of range out through whatever time period, whether it's through the rest of the day today or through the week or through the month or through the quarter, you can then take the no, which is somewhat analogous to, I guess, being short options in like vanilla option markets, except the difference here is that you don't have liquidation risk. You don't have to post like major amounts of margin against it where you're going to get rinsed out and forced to buy back in by the exchange if or they're going to buy you back in.
I mean, essentially, you're betting on a flat market.
That's all you're doing. You're taking a position that you think that volatility, that the market will just go sideways,
it's going to stay
and you
in
find your hands. And so if you go on, if you look at the nose right now, Colin, on the platform.
Yep.
So we could see like just on the OCT31. So this is expiring, October 31st. Is right now. If you took the nose on the same strikes, 13,000 up to 14,000, the 13,000 is 1.18 to 1 for the no, and the 14,000 is a 1.13 to 1. So you buy both, you're actually long both. So your risk is still capped at just the $20 that you put in, $10 on each side. And if we stay within that range, then you will earn about 21% on your money for that one period.
And for anyone who is watching this thinking, wanting a simplified, because again, I'm learning this sort of live as we go. A couple of days now. One thing I figured out is if you hover over the odds, one thing Rob told me, I shouldn't say I figured out, but he told me this. If you hover over the odds, it tells you 88% market probability. Now, another way to think of that is 88 cents. Okay, so if any of these contracts expire in the money, they expire for $1. That's what they are worth. If they expire out of the money, if they just if they don't hit what you said, they expire worthless for $0. So at 88 cents, I could make 22 cents. So you're, like you said, 22%. Or I could, for 84.7%, 84.7 cents, I can make the difference between that and $1 or lose it.
Yeah, it would be like 13 and 18, let's say. So
and that really helped me when I was thinking about cashing out, because it gave me terms I could understand. I bought my my OCT30 TIX contracts yesterday, and it was like 36%. So I bought it for 36 cents. Then later in the day, the price had moved up closer to my strike, and it actually was trading at like 56 cents.
Right.
Or 56% likelihood. And then I sold it, and I thought, okay, cool. Like I just made, whatever, 50, 70%.
That's right.
So just another way to think of it for those of us who come from like order book town.
From order book town, you can look at it. You can just look at those probabilities and
as
it's
pennies.
It's the inverse as pennies. So that's a great way to look at it.
Yeah.
And so this is really just saying, like, you're taking the inside. You're just saying that that the market won't expand beyond either band. And that's it. So if it does touch 13,000, you'll lose your initial investment of on that one side of $10. But then if it goes up and touches the 14,000, you'll recoup some of it. So this is like, if you think about in vanilla options, like most people in options, like especially in the retail, not only in the retail world, but also in the fund world, they tend to sell options or be net short. It's the more consistent way of getting yield, but it also has, like, if you think about this, like, it has that tendency of like basically 8 times or 9 times out of 10, it's gonna expire in your favor. But the one time it doesn't, in vanilla options, it can get really nasty, because if you're short options, you effectively have no coverage on downside. So like if you're short a put in S&Ps and the S&P shit the bed, it's the worst possible thing that can happen, because volatility goes higher. You're effectively net short volatility. Your deltas start going against you. All these more complex options, things that we can discuss later, happens that make it pretty nasty. But for the most part, like, if you can go, like I was telling somebody on a stream the other day that I know a guy from the Mercantile Exchange that literally like started on a retail account with like $5,000 on a credit card, and just had an option selling strategy that he was rolling the short options every month for years, and he turned that 5,000 into $32 million.
Jesus.
Yeah, it just literally like just doubled down on it, like just nonstop, and it just became this massive thing for him. But then on 2000, like in 2008, like when the market, a few days when the market shit the bed, a lot of it went back. So,
gut punch. Gut punch. That's
you hear these sayings in trading, like this is picking up nickels in front of a steamroller. This is this and that. There is definitely a different risk profile to doing that. And like if you guys like people read like Black Swan or Nassim Taleb type stuff, it's all about like selling options is actually the most psychotic thing you can do, because you're right a ton until you're wrong. And when you're wrong, you're really fucking wrong. And so you want to expect that outlier event to happen. The cost of ensuring that by buying the long volatility play effectively, generally is pretty cheap. And when it's cheap, you want to be buying it, and then that's when all of a sudden it's quiet, and then suddenly some unexpected news hits and the market goes berserk. You end up really getting paid off on those things. But you may be wrong. You have to be willing to be wrong a lot. Like you're going to take a bunch of small losses and then effectively.
Because the one we talked about, the strangle, I mean, that seems unlikely. I mean, the market's paying you quite a bit if it happens, so therefore it is inherent that it's unlikely. But like you're saying,
market odds are always going to be in the favor of like, hey, we'll pay you a lot, but like it's likely you're not going to get paid. But so you want to be taking these you got to kind of expect like, well, how many times do I think I need to do this in order to at least break even from the long side, and then from the no side. And remember, both of these in-ticks wicks, you're always long. Your risk is always limited to the size of the position that you put on. So it's $10. It's $10. It can never get any worse.
And I think that's an important point, going back to the stop losses that I talked about and measuring risk and percentages. And in some sense, this is sexy easy in that, okay, put in $10 because that is what's representing, let's say 0.1% of my account, which is probably what I would risk personally right now while I'm learning this. And but that's the point. Like you really, as with everything we do, you got to manage risk. So if we're going to pop higher and lower today and I'll get paid, I actually don't think we will, for what it's worth. I'm not taking this strangle, but I like the idea of that maybe Saturday, Sunday, Monday. Now, like you said, there's an election coming. We can expect volatility. And that's what I was thinking when you talked about, taking the no, basically calling for a tight range. And then you're great. You're only making 15, 20% a day, but markets range, 80% of the time they're in a trending state. So being able to spot what you can expect will cause that volatility. And actually right here, it was 5 a.m. I remember very clearly the Singapore bank announced that they were going to have some Bitcoin. Okay, cash out, right? If you have your finger on the trigger, if you're taking the market pulse, or on the other side, taking the wicks for that day, because my guess is that news was not priced in right away. So it gets into a little more fundamentals, being able to spot even technically, if you get a tight squeeze, like we had way back here on Bitcoin, when it really gets tight, you can expect volatility. And that's why you hear guys going long vol. So I'm starting to wrap my head around this. I'm not an options guy, but the more I listen to you and Rob talk,
you always want to buy volatility cheap, like when it's very quiet, and you want to sell it when it's rich. Selling it quiet is generally like, it goes from picking up dimes in front of the steamroller to nickels to pennies.
Well, and that's why, like, for example, today, I don't think it's going to blast either way, because we had this pretty volatile move, and then a little more volatility today. And I just kind of expect us to coil here for a little bit. So I'm actually feeling the nose maybe for, and
look, this
is the weekend, and then it's going to be election.
Correct.
Who knows?
There is a great, Rob and I talk a lot about this, is that playing those no's, imagine if we just sit in a range for weeks, and you just kept taking the daily, like small amount of money. Yeah. And you just took the daily, and you're just like, look, I'm just going to keep rolling it. And it doesn't have to, again, like you said, you get a move, you get some news, you're sitting here trading, and like you literally lift one leg and you cash out, and you're going to get paid out on the other leg, and then you can roll it. You actually can reestablish the position at different bands. And there's just so many different permutations and ways to do this. But just strictly what we're talking about, something very simple today, like trading the nose on the 13 and 14. So basically being on the no wick strangle. That if we just sat here in a very quiet range, day over day, and you just said, look, I'm gonna like every day that I get paid, I'm gonna take half of what I earned, and then I'm gonna roll my total amount to the next day.
Yeah.
I think it only takes like 2 or 3 times to basically recoup your initial capital. And then you can really start compounding. And it's really an interesting play. That's one way to do it, is just through a compounding strategy and just like kind of basically seeing if there's a run, like you catch a really quiet period, like you're coming out of a volatile period into a consolidation period or into a consolidation area, and then just running those every day as one strategy. But also think about it from like, it just in the crypto space, like around APY. Just do the math on that.
Yield.
So like,
yeah,
this is really a yield play. So if you right now, if it's like what 1.17 on the down and 1.13 on the up, so that's 30 divided. So you're going to make 15% if this just sat where it is for the rest of the day, and then you rolled it to tomorrow. You're going to make another 15% if you do it again. Like.
Yeah. And it can actually be fairly volatile. Like, I mean, I would say if you're trading the 15-minute, I mean, these are not small moves, but we're talking like $1,000 range here. So you can actually still even allow for some measure of volatility while you're playing the nose.
And you can go wider. You can go down, you can do much wider strikes if you'd like.
Yeah, the 12.5.
Yeah, you can go.
I get paid less, but it obviously is a safer play.
Yeah, there's no free lunch, right? So
yeah, that's right.
So here, if you go out to like the like November 27th contract, yeah, there you go.
I actually just picked up a few wicks this morning.
Nice.
Yeah, started layering into a position because why not? We're in a big uptrend and volatility incoming. Let's see.
Yeah, imagine going really wide on. Imagine going like 11.5 up to 20K or something, or 11.5 to 15K, and widening it out, and then rolling that every month. Well, so what kind of yield is that paying right now? If that expires, it's what's it on the up on the 15K? It's 1.75.
Yeah, 1.75.
Yep, and then on like the 11.5.
The 11.5 is 63.9, or 1.56.
So you're getting a huge return if those don't touch.
So let's see, where's our 15? Yeah, that would be there. And what's that? 12, 11.5. Yeah, so we just basically live. If I take this play, then we just have to live in here for a month.
That's right, and you get paid. You get paid. You'll double your money, effectively, and then from there, like imagine rolling that over every month and like just finding the different bands. Like and let's say your effective return is not even 100%. Like this looks like it would be paying 125, but let's say it's down to like 50% a month. But times 12 months that's a 600% APY on something that you're not getting rugged. Like the only way you're getting rugged is if it touches the bands effectively.
Yeah.
Not like it's not a bunch of devs that are going to come and like basically steal your money through a smart contract.
Well, and I mean, I'm just thinking
you actually can trade through it and not get stung. It doesn't mean you're not going to lose money. There's always risk of losing money. It's just the nature of trading at the end of the day.
Well, you have to have that risk, or no one would offer you the odds or whatever, right? But and that's where risk management comes back. If I ensure that whatever I lose won't hurt me, especially in the learning process, somebody actually just asked, and I'll tie this in with their question. Crown Town Crypto asked, how can I begin day trading or option purchasing with a limit of $500? Well, first of all, I'd have to ask where you're from. If you're in the US, then nothing to do with ticks and wicks. But in general, I mean, you can play this for $1. So I can go, I'm going to go over here to Wix. I'm going to say, am I going to wick up here to 14K before the end of next month? I could say yes. So put in $1. So, I mean, $500 will usually price you out of the market, right? It's going to be tough for you to participate in most markets with $500. And the nice thing here is, you can access this with as little as $1. And that's honestly what I would recommend you do. If you're learning this stuff, I'd say get in there, get a journal, track what you're doing, keep track of this. There's actually a nice section here with trade history and all. And then, find a strategy. And it's like, yeah, well, it's I'm not going to make much with $1. It's like, yeah, but you're not going to lose much. But what you're going to do is you're going to learn how to find your edge. And once you found that edge, you can crank it up $2, $5,
Yes,
$10.
start with $1.
Yeah, get in there and learn this stuff. And that's what I'm doing. I'm firing off tenors, $100 here, like nothing too crazy, nothing that's going to help, make me lose my lunch. As then I go, oh shit, I didn't know options. I thought I did. I'm learning with an amount that I'm comfortable with, and it's exciting and it's fun. But the key is you're not going to learn just by playing. You got to crunch your data. You got to track it. And we've been going over a lot of these numbers, and this could look complicated, arguably, but if you've ever looked at an options chart, I mean, that stuff makes my head spin over on Deribit, and I've used them once or twice. But yeah, I really like how this is just kind of layered down. It reminds me a lot of sports betting when I used to like take some like Sunday pick'ems, and it's okay. I got my average, I got my entry value, I got my live value, and cash out, buy more. Like it's pretty simple, and so
it's so simple. And look, as you get more sophisticated, there's ways you can put these against vanilla, against the vanilla options that exist on Deribit or some other exchanges. You can trade them against perps. You can trade them against spot. You can trade them against the pari-mutuals, like the Moonrack product. Like, there's just so many, and then against themselves. And there's just so many permutations. And part of our mission on at Hxro and at Hxro Labs, like Hxro Labs is really about the education content. Is teaching people, like I've had 25 years of doing this stuff. Rob's had 20 years of doing this stuff. Like, we want to distill this down and make it simple and bring that content to the masses and give you a simple way to do it. Like, Deribit it's an amazing exchange. It's actually probably my favorite crypto exchange.
Yeah, no, it's solid.
I love.
I'm not hating on this exchange quality as much as just options tables.
It's just options are complex. They're not for everybody. It's been even like they don't call them vanillas because they're easy to understand.
No,
so
sounds like
really, really understanding the dimensions around it. We, even like teaching people about Greeks and what goes into these types of products. We feel that there's a duty to educate on it, but we want to do it in a simple and fun way, and and keep it cool and keep it light, because that's like we're not on this earth long enough to take ourselves too seriously. So we want to be, we want to do this in a way that people can really grasp the concepts of it, and try to remove some of the noise of even just the execution or how you participate, and give that to you in familiar ways, and then have some fun with it, and then have it turn into something profitable for the traders.
Hell yeah. And I mean, that's what I'm looking forward to. I've got a fairly well vetted trading plan. I use it on futures, I use it on spot, and I'm comfortable with it. It's profitable. I just kind of rinse and repeat and, do my best to eliminate human errors, which I still make quite often, as I talk about on stream all the time. And so that's my thing. And I could not be more excited to get into this with you on an ongoing basis going forward. And, I know Daniel was talking about some strangles online, Messi and Rob, and we just want to get as much of this kind of alpha, these strategies. Like even today, you've just kind of blown my mind. I'm like, wait a sec, because I look at these no's and I just think, oh, like it's only paying a little, like, oh man, that thing, that costs 94 cents. Like, oh, I'm going to make $6. But then, I put it on the chart and I'm like, man, I bet I could get there. Like I'm willing to bet that I could get there. And then I just got to think about opportunity cost. How much money am I locking up to sit there for a month? But like the way you've described this straddle, I'm like, dude, I get so bored during those tight ranging markets. And now I have a way where I can have a little action on the side where I can say, okay, yeah, like we just had a huge impulse move. I bet we're going to be shocked into this range for a little bit. And I talk about that all the time. And we saw it here. It was boring as hell. What was it? May till friggin' mid-July. These things were yielding, so to speak. So I'm really keen to get into it.
Yep. Very cool.
Beautiful. Cool. Well, what are we doing for time? Yeah, we're just at the top of the hour. We got some really nice engagement in the chats. So shout out to Jim. So sorry to hear that you were traveling on bad news, but hope you're well and safe. Got Space DD back up there and Zanzibar hanging out in the chat, and Crypto Town Crows chatting with us on Trading View, and Johnny going wild on the back end, hitting him Now, what are the fundamentals to look at and learn with options to better gauge the trade? So let's wrap up. That's a good question, and I think we should touch on that. JH Nick 47 is asking, what are the fundamentals to look at and learn with options to better gauge the trade? How would you respond to that?
What was the question again?
He said, what are the fundamentals to look at and to learn with options to better gauge a trade? So in other words, maybe where to learn some of this stuff a little more in depth.
Well, I mean, obviously we're going to start putting content out on HxroLabs.io. I think that, if you're in traditional markets like platforms, I think like Jim in here was just mentioning, like Thinkorswim, those are great places. There's tons of content, all over YouTube and whatnot. But I would really, start by getting a good firm understanding of just like the linear side of the market, which is really just the underlying assets like spot and some of the futures and perps products that are traded. Understanding what some of the drivers of those different markets are, and then from there we start to introduce some of the more multi-dimensional, non-linear nature of options.
Yeah, because that's when you get into the time. That's what
correct
with me, right? Like if I'm like, oh, I'm long because I think we're going to hit 15K, I can just sit there. I'm cool, whatever. But if I'm long 15K by October 31st, I'm like, shit, I got 7 hours to get there. It's a whole new dimension. I'm glad you mentioned that.
Dimension. Yeah, and you'll notice how time works in ticks and Wix contracts. It has a very different relationship with each, and so I'm going to be doing a ton of writing around this stuff and a lot more streams of you guys, and so will Rob, to really break it down. And it really is important that we do it kind of piece by piece for everybody. And and almost like in our 1 minute alphas, like we're putting together.
Yeah, I think we could get a new segment on here, or even just add in a new stream altogether, and just have that sort of 101, what you want to know. And I want to be part of that because this
For
is,
sure.
and I can be your guinea pig. I mean, I've got that underlying understanding of the futures, of the perps, of the spot markets, and I really am excited to apply this because everyone who I like, actually every major trader that I met just when I was a little younger, but he's like, oh yeah, all options traders. They're all options traders.
Yeah, there's when you understand that, and it just gives you more dimensions and more ways to take advantage of the market, of opportunities in the market, especially like when there's big shifts in sentiment, and really starting to understand the relationship of, I think I put a tweet out about this a few days ago, like really understanding the relationship of like time we were talking about relative to like path risk. Like, at the end of the day, let's just think about like, we're all in, I don't think anybody's in Bitcoin, including Peter Schiff for that matter, because they're bears and they want to see it go to zero. I think he's a closet mega bull.
Oh, I bet he has a bunch. I tweeted at him
yeah,
yesterday. And I was thinking, he's laughing.
But we all think that Bitcoin's going higher. Bitcoin is programmed, basically designed to go higher effectively. Over the next long run, the next 5 years, it's going to go much higher. So you have that time horizon, you're going to be in good shape. It's why one of the reasons we're all here. But in the short run, it could take a path that could absolutely obliterate you, or it can make you millions, go either way, right?
Yeah.
That path risk is something that you really need to understand when you're trading along different time frames and different time horizons. And that's something that markets like Ticks and Wix, you could really learn how to exploit those opportunities. And so that path risk plus time, two dimensions that you can't it's not very easy to really isolate when you're just trading like straight outright spot market, let's say. So and then also the relationship of one component of like a Ticks contract versus the relationship of a Wix contract, and like kind of spreading the two between the two, and just making the market something more than just about up and down. And the market offers that dimension, multiple dimensions where it goes beyond just up and down. And that's one of the things that options in general, and then these types of which really underneath these are really kind of futures markets, more than they are like straight out options that that you really could use to take advantage of different plays in the market.
Yeah, no, I mean, today's conversation alone just really opened my eyes to that new dimension. Rather than up, down, it's like yes, no, when, up, down.
Yeah,
And
there you go.
within that, you just have this matrix of opportunity. I mean, I think, I'm not going to sugarcoat it. There's risks there. I think options trading is, historically, because it's so attractive. And like you say, writing those options is so profitable so much of the time. And then somebody goes, oh, wait, what? Volatility's up? Like, so I really want to stress the education piece here, because I hate to think anyone watching our stream is going to get the idea they can march in here and just make a killing tomorrow. But the excitement I have for this really comes to the ease of access that I now have, because I've used Deribit before and I have no problem with it as an options exchange. I'm sure it's great. But I just found it overwhelming. And I look at this, I'm like, oh yeah, okay, this makes sense. This speaks to me. And just our conversation today gives me a real sense of how I can start to play with it. I'm actually going to look into some no's next time. Next time we have a strong impulse move and I see it kind of get smacked down. Like I've talked about this a number of times. This one right here, right? Like this smackdown candle to me. And I was like, oh, dude, we're going to be ranging for a while. I'm like, oh, but I didn't have a way to play that. I just had to sit out and wait for the next break. But now I'm going to be looking here. I'll be like, okay, cool. I got my straddle. Let's run it. So
for sure,
I'm pumped, dude.
Great, man. Yeah, I appreciate that. And
flip back to the studio, Johnny.
I think there's, I think we have a whole world of potential users that are really going to gravitate towards this. So that's the plan.
It's sexy and accessible and fun. I mean, the other side of it is like, be honest, like I'm gonna grab a beer tonight and like slap down $20 on the.
There you go.
Yes, Wix into the close, like just for shit. Like I mean, I tell people too on here, like I used to bet sports on Sunday Fun Day, get on the football, and we actually have an awesome guest coming up in the next couple of weeks who's kind of an OG. I know you know who I'm talking about, and so big spoiler alert, he is coming on. Should we name drop?
Yeah,
let's do it. Why not? Hit us up, Dan.
Jonathan Bales.
Yeah, Jonathan Bales is coming on, and if you guys haven't heard of him, he is sort of a daily fantasy sport guru. He's written the books on it. I actually have a few friends who have read his books. I was like, yeah, I'm interviewing him. So he's coming up in a few weeks, and so yeah, I was on the phone with him the other day, and we were talking about, just that degen, some gambling, and we have so many good stories, guys. It's going to be great. So
he actually, and I'm sure he'll talk about it on the stream. He's got a new blog site called Lucky Maverick. And he's writing some of the coolest shit. And it's just really, the whole thing is really dedicated almost to like how to win games, like how to win at anything. Like,
like set of rules.
He just wrote a whole thing on how to win at rock, paper, scissors, for example. But like he's just a next level professional gambler that is so smart and is such a neat guy and cool ways of thinking about it. And like every single thing that he talks about is so relatable to trading.
Oh yeah. No, we found so many bridges, and that's why we had that call, just to make sure we were setting it up to be able to bring it back in to what we're doing here. And it just all starts with risk management and self-control and really, I would argue, self-care, coming in with your A game.
Yeah, and finding positive expected value opportunities, and then understanding like really what those are, and the bigger you think you have an edge in something, like the harder you should be pushing your chips in on it. And like over the long haul, like you stop caring about the short run, because that it's some component of what you're doing is just like, I have this process that works, just like you have your plan, and as that becomes more and more repeatable, you don't care about losing. Yeah, because it's just part of the game, and that losses come with but if you widen out your time horizon, suddenly over like a couple years, you see your P&L growth go up and to the right. And these types of opportunities are the guys that like him, they just find these and they'll bet on anything. And he does it on like
I can't he's like, oh, play a little poker, do some sports betting, daily fantasy, did a little trading, and rock, paper, scissors, like the weather.
Understand the work that these guys put into doing things like there's an article a guy wrote about winning at Jeopardy. This guy was a professional gambler also. I'll actually, let me find it and I'll put it in the chat. But there's all these little things that you can pick up that will apply to whatever it is you're trading. And that just brings me to the next point also, is that I think that just with the advent of like data and information that's out in the world that's free for everybody now, you know, which is one of our thoughts of why, you know, why Hxro Labs, free content. Like, you're gonna go, you know,
yeah.
be giving you great content, and I don't think you need to be paying for it, because there's, you know, it really is a value add to our community. So they, you can basically, it doesn't matter like what the underlier is now, like as long as you have good data or you have good information and you have some way to express an opinion on it and find that opportunity, like that's one of the reasons that we looked at, you know, when we're creating ticks and wicks, like let's make this look like odds. Let's deliver it as odds. It's a familiar way that most people in the world, like anybody who's traded, probably has like, you know, bet on a soccer match at one point in their life. And like, so you understand, like, let's just, if we can just distill it down to something that visually and mentally you can process, then it should get really easy for you. It doesn't mean that it's suddenly gambling, or it actually is quite the opposite. It's actually putting you in a position to really not gamble, because you can now think about this in a way that you can try to understand, like, am I getting some edge in what I'm doing?
Yeah,
So,
I mean, to me, it's really about accessibility, right? I can access this. This makes sense to me, and even though I haven't vetted, you know, a new setup that I'm going to use on it, I'm starting, and it's a new product, and you know, I've started collecting data, and I think it all goes back to everything you just said, you know, regarding Bales and all the stuff he does. And I talk to you guys about this all the time. You really need, if you haven't already, get out even a Google Doc and start tracking your trades. Start tracking your data. Every dollar you move around in your portfolio, write it down, track it personally, and not a shell. I use Edgewonk. It's like $200 lifetime. Great little journal software. It's a Java application, but like, you know, there's so many options for that. But if you don't track your data, and then you can't know if you found edge. And if you found edge and you have a whole bunch of data, you can tweak it, right? You can start to say, oh, you know, every time I trade this exact setup, or every time I move my stop during the trade or whatever, I lose money. Okay, I'm going to stop doing that. You can hone your edge, and, you know, thinking long term, guys. You know, thinking 2 years, 4 years, 5 years, 10 years. You know, if you want one cycle pony and buy some Bitcoin and try to ride it, cool. Like, nothing wrong with that. But I'm here, Nick's here. We're here to really talk to the long-term vision, and you know, the ball's rolling for me on Ticks and Wicks. I've loaded my account and I am testing. So I should definitely mention, since we just talked about Bales coming up on the show in a few weeks, before that, actually on Monday, for sort of an election-focused stream next week, you can find me and Crypto Messiah, who's going to join. He's going to flip over to this side of Hxro Labs. You guys usually watch him on Sunday nights. He's going to join me on Monday as well. So you guys can all look forward to that.
Great.
And I think with that, we will wrap for today. You are going to be back at some point, I'm sure, Gunny. Going to get Rob on here, and looking forward to figure out, you know, how we end up approaching this educational aspect, so that we can put together some stuff to really iron out some of these different strategies, because I can't wait to add that dimension to my trading.
Hell yeah. We're excited to give it to you and to the rest of the world. I think it's going to be a great product in the marketplace.
Beautiful. And with that, I think we'll wrap. Nick, what have you been working on over there?
Just keeping an eye on the markets. I saw Belgium just announced a nationwide lockdown. San Francisco is also announcing they're stopping reopenings and going to be reverting that. So, you know, keeping an eye on that stuff for sure. S&P, you know, it did tick to a new low here, but it's, you know, supporting this level. Bitcoin just kind of chilling out here. I think actually Bitcoin could fall to retest that, you know, 1335 level or something. You got the 30-minute stoke here kind of about to roll over. And same thing with Ethereum, you know, bearish below 407 intraday, probably bearish below like 385, 387. Other than that, you know, we're just it's coming into the weekend. Funding rates look pretty good for Bitcoin. We're not gonna have the drawdown of the legacy markets hanging over us. So I think we could have a pretty good week, pretty good weekend here.
Beautiful. Yeah, I've got to I'm gonna look at some straddle stuff into the weekend, because I really do think we're just gonna range here. So that's probably gonna be my first sort of test trade after what we talked about today.
No wick strangle.
Yeah, a no wick strangle, basically. Oh, is that what that's called? Where if I say no, I just don't want anything to move for like 2 days.
You're not going to be short it. So there's really no shorting. So it's just the no.
Oh yeah. So I'm gonna hit no.
You're long the no tick strangle.
I got to look into it, but I think I'm going to try that out. Yeah, I'm going to try that out. And then I'm going to get some yeses into the election. Again, guys, I'm not going crazy. I'm going to drop 10, 20, 50 bucks, whatever. Just enough to sweat and know that I am playing. And, with that, I think we'll wrap for today. So have a wonderful weekend, everybody. Happy Halloween. And thank you so much for Gunny for coming on today to join us and walk us through some of that.
Such a killer job. I'm so fucking pumped to have you, and seeing you guys in the studio is pretty.
It's golden, man.
You were honest on that Batman mask, man. I think you might need to keep it for a while.
Yeah, I gotta get the Batman voice back on here before we go. But Nick, why don't you start taking us out?
Yeah, if you liked what we got, smash that like button. We're gonna be back here on Monday again. RT will be taking the helm. I'll be here on Wednesday, and always, as you say, trade from a position of strength. And have a great weekend, guys.
Take care, everybody.